Last week was one of the most volatile weeks we've seen in the markets in quite some time. The stock market seemed to have flipped the script with what started with fears of Black Monday in the beginning of the week, ending with one of the biggest daily gains we've seen in months. Tariff uncertainty continues to weigh heavily on investor sentiment, with everyone trying to figure out how the market is going to react next. Meanwhile, Bitcoin had a wild ride of its own, surging from the $74,000 region low to over $85,000 over the weekend, marking a $10,000 plus move in just a few days. In a late week twist, Trump announced the new tariff exemptions on select products, including laptops, cell phones, semiconductors, which could give some short-term relief to the tech sector this week. And don't forget, it's a shorter week in the traditional markets, as the stock market will be closed this Friday for Good Friday. Of course, crypto never sleeps, however. And all eyes will be on Jerome Powell this Wednesday as he delivers a key speech on the market outlook amidst all these rapid developments. If you haven't already, be sure to hit the like and subscribe button so you don't miss any of our daily uploads. My name is Paul Sampson. This is DataDash. You're going to need a cup of coffee because we're breaking it all down right now. So start things off, once again, we're going to begin the week with the market more than likely reacting to this late news that listed, I believe it was late Friday night, where Trump had announced the exemption for certain products such as smartphones, computers, and other electronics that are going to be exempt from the sweeping reciprocal tariffs that the administration had just announced. In a break for consumers, the United States will not collect the new duties on about 20 products listed in the guidance issued by Customs of Border Protection and that federal agency tasked with collecting tariff revenues. And that this list that was published late on Friday night, after the markets, the traditional markets at least, had already closed, does include things like routers, semiconductor chips, flat panel displays, disk drives, memory chips, and other tech components. So now the market hasn't had time to react to this quite yet at the time of recording. When we do post this video in the morning, maybe we'll see some pre-market movement here that's going to be in regards to this. You'll see things along the tech sector that may see a little bit of relief, such as Apple, NVDA, and others. Now, Apple did come down to a major volume level that sat right at $169 that we got a significant bounce from on Wednesday of last week. And then we closed the week back up above around that $200 region. Overall, from the high from December, we've seen a decline of 35%. So even though we are getting a significant bounce at the moment, it will be something to be watching for to see if this actually materializes into anything, to see if we're going to see any more continued upside. Aside from that, just looking at some simple Fibonacci retracement areas here from that overall high to the low, we've got a gold pocket Fibonacci retracement area, as well as the 0.382 and the 0.5 areas, which are three main general areas that I look to for a retracement zone too. And those come in just above us. One is at $202. The next would be around that 213. And then the major resistance for any more sizable upside continuation, in my opinion, would be to get through 224 and 227. But sizable bounce so far. If we come down and actually lose that low, we do have a key region just below us as well at $151. That is a quarterly untapped point of control, essentially. So that is a volume level that's also sitting with a high time frame average price known as the quarterly pivot. So that's a untapped high time frame average from 3 months, basically, that sits both of those on the same level at 151, assuming if we come back down and lose that low, and that would be the region I'd be looking to. But assuming that the market reacts well today, I would look for that continued move up towards these three key Fibonacci levels, either the 202, 213 to 227, essentially. Take a quick look at NVIDIA also to just kind of see what the price action is doing at the moment, and utilizing the overall range data that I'm looking at here, we are pushing back up into this previous range here. And we do have the point of control that is actually sitting untapped at the moment. So as long as we are living above this $109 region, the price action most likely will seek out that point of control. This is the highest traded volume area within this region. And that does sit at about $118. That would be the next area I'd look to see either a rejection from or a flip to signal us for more upside. And in that term, I'd look to rotate this range, meaning from low to high in this case. So I'd be looking for a move up back towards that $135 region. And if we take a Fibonacci retracement from the recent swing high back here from January 6th down to that low, you can also see that we've got a little fib confluence here where we have the 0.5 Fibonacci retracement, meaning that 50% of this down move here getting retraced into aligns up with that 119, 118 area, that untapped point of control as well. So gold pocket for this. Once again, looking for that flip of basically 118 takes us up into that 127 to 130. And then at that point, truly, I'd look for a range rotation up to 135, and then we'd reevaluate. I mentioned earlier in the video that we had a shorter week, at least in the traditional markets, as this Friday is Good Friday. So the traditional stock market will be closing, as well as I believe options expiring on Thursday a little earlier. You have the bonds market closing early on Thursday, close Friday as well. Crypto, however, will still be open. So we may see some volatility more so in the middle of the week per usual. And one thing that really sticks out to me as I look at the economic events for this week is that Wednesday we have the Fed Chair Jerome Powell discussing basically the economic outlook, as we have all these new changes constantly occurring along with these tariffs. So pairing things up a little bit with the technical analysis as well. A lot of times when we have something like this, where at the moment, at least nothing that we aren't aware of for tomorrow or Tuesday, but when we have something like this on Wednesday, and as well as when we finish off a week with a pretty sizable move, whether it's up or down, a lot of times that Monday, Tuesday is a little bit of a reversal, a pullback, a cool down, if you will. And then if it's right before a big news event such as this, so I'm painting a picture here, right? Like, so this week so far, or the previous week before us, we had a pretty sizable ending at least, right? So the price action is not necessarily at all-time highs, but we had a sizable move out of Bitcoin, once again, 74,000, 85,000. You had the stock market with a pretty sizable bounce. You have somewhat decent news as we're beginning Monday here with the tariff exemptions for some of the tech sector, where you would think that, okay, things are going to probably continue up. A lot of times we actually see a pullback on these first couple of days here right after that large move, in this case, the move to the upside. So for me, in Monday and Tuesday, I'm actually going to be looking for probably a more of a little bit of a cooler cool down, if you will. And then going into Wednesday, let's just say that if we see the market actually pull back Monday and Tuesday, give or take, or really kind of coast sideways with more of a downward trend, a lot of times everyone will think that that's pricing in the decision that Jerome Powell may make on Wednesday, making people think that if the market is pulling down, this is just a hypothetical idea at the moment, but and it goes vice versa too. If we see a sizable move up going into that meeting, once again, everyone thinks that that's a price in move. And then a lot of times when that event does occur, that time window, we see a reversal in some form or caliber. So either way, volatility is likely. So once again, we've got Bitcoin holding above $80,000. Now, last Monday, we actually started off the week with a sizable drop right around this region here. This was the Monday open, basically right around here. This was Monday into Tuesday, and then we got a sizable run up here. And on our last video, one of the biggest things that I had mentioned is that each and every week I look for the previous week's data. And regardless if that's going to be an overall reversal to new highs or new lows or what have you, when we have a dump like this that we start off the week into, very likely, I would probably venture to say 70 to 80% of the time, we reverse it. And all we do is essentially rotate and run last week's range. And whether or not that's going to materialize into anything sizable or not is the question. We have to kind of take the data as it comes, reevaluate, adjust as the new data comes in. And just as an example here, so this was actually what we were talking about last Monday. We were trading right into this region right there as we began the week. I noted that a lot of times, especially when we're opening right at the low. So in this case, this was the weeks before last week, right? So this is what we discussed last Monday, basically covering the week before that, which was from March 31st till March 7th. All right, and on Monday, I'd stated that a lot of times we'll spend a little bit of ranging around the low. And then ultimately, we have a couple of weekly targets, one of which being the weekly pivot, which at this point, I believe it was around that $81,000 region. And then we also have our weekly untapped point of control. Naked point of control is what it is. Once again, the highest volume traded area on that time frame or range, whether it's structural or time base. And you could see how respected this was here, okay? And again, it's one of those things where we had to monitor and manage this along the way. So we eventually obviously came right up to that key level right there, that nice weekly target on Wednesday. Got a little bit of a pullback. You had a low, a high, higher low situation right here. And then at this point, when we re-enter the range again, we'd look to rotate the range. So once again, in this case, take off my scribbles, from low to high. And as we can see, that's exactly what we've done here, right? So got a little swing around the lows here, basically ran it right up to our weekly targets here, small cool down, rotated the range. And this move I look for each and every week, whether it's from the low to the high or from a high back down to the low. Now, after we have such a move like this now, it's once again, it's just back and forth. It's back and forth. So for this week, we're starting off basically around these highs. More than likely, we'll have a new weekly average down below us. We're going to have our new weekly range more than likely down below us, a new point of control back down in this region. So we would probably look to see a decent little pullback here as we begin the week. And once again, going with the idea that last week we had really scary news, fears of a Black Monday as the market opened, and you got a small pullback around that open, don't get me wrong, but overall what happened, the market ended the week on a high. In this case, I don't necessarily think that we're going to just have a full-blown reversal at this point. $80,000 still remains that very key area for me to lose on a daily and weekly closing basis. And so far, we are back above that, closing it. So for me, I'm still looking more towards upside at the moment. But short term, as we walk into Monday and Tuesday, as I kind of discussed that idea before, we have that speech on Wednesday. Currently we're walking into today, Monday morning, with a little bit of good news where we have those tariff exemptions. So if anybody's walking in, seeing that the price action is positive, we have positive news, we're going to continue thinking that the market goes higher. Then it kind of comes into the play where, just like we did last week, when everybody was super fearful, I was targeting higher at that point from basically that $77,000 previous low up to 85K for Bitcoin here. We're probably going to open up the week with everyone pretty bullish at that point too. While I do still think that upside is the way we're heading, probably towards that 89, 90, maybe 95,000. Just don't be shocked if we do see a pullback first. And all that does is we come back down, we run last week's range. Once again, everything's going to generate below us this week. So we've got to be able to take the news in strides and then just be able to adapt as the market changes here, right? All right, so we kind of discussed a little bit more of the short term where we could see a move back more than likely down towards around $80,000 yet again. We're trading currently at 83, but to start the week off, it would be nothing to come back down to those areas. That's where we're going to probably generate our next weekly average for the previous week here as we begin this week. 77 would be kind of that next really interesting area to come back down to. And then, of course, sweeping the low is always the number one setup into the week or into the month or what have you. When we were trading back down around those regions, would be something to be aware of. But at the moment, we are coming up. We're pushing up a normal pullback back to 81, and then we'll look to see if we get any strength out of that. Still looking to run up to this $89,000 region sometime in this quarter here, and we're not too far off from it right now. And once again, this is the high time frame average. This is the average of 90 days from quarter one. It's likely to be met in quarter two. It's not a guarantee, but it is likely, right? So when we're building out our trading strategies, it's something to be aware of. This to me is the biggest level above us at the moment in more of a local stair-stepping level by level play that I will look to see any kind of flip of support into this for any more sizable upside. Aside from that, even if we did push all the way up to this $89,000 region, this is still a big area where we could see a sizable rejection come out of if we don't get it beforehand, of course. But that is where I'll be paying attention to the most if we come into it. And then if we just look at this in the sense of a higher time frame range setup, we can see what we've done here, right? So last week when we started off with that Black Monday fear, all we did was effectively come down and we took the lows from last quarter, right? So once again, when looking at this through the eyes of a trader, which I know many of you are investors and I am as well, but day by day, there's opportunities at hand here. So while I'm waiting on those longer term plays to come through, obviously we're gauging the market, managing risk along the way, and there's many ways to invest and trade these markets. So when we originally came down all the way to 77,000, this was on March 11th. We filled the CME gap, I believe, at that point, and then we had a pretty sizable bounce out of there, right? For about from the 11th of March up to about 2 weeks, basically we had, and it was a nice 16% rally. Imagine how many flooded into new positions. And I'm not speaking on just spot buy and holds, of course, but the leverage in the market is unfortunately what is driving the biggest liquidity more than likely, right? So came down, filled the CME gap, got a nice, really steady 16% run up for 2 weeks. Everybody's thinking the bottom is in type of deal. Stop losses below the low because not everybody got in right here. And even if you did, let's just say you got a beautiful CME gap fill and you jumped in right there and your position is good and you're 2 weeks go by, you're 16% to the upside, you're feeling great. You move your stop losses up if you do, or you just got it set right below, right? And once again, most don't enter at these wicks. They're coming in the middle. So that's even a pretty wide stop loss. And you come down just weeks later, just give it all right back up, stop out all these people. And then you get another sizable bounce right here, right? So we see this set up on every time frame, daily, weekly, monthly, quarterly, so on and so forth. And essentially, if this was a daily range here, I'd look for a sweep of the low, and then you run it back to the key levels, right? Your high time frame average, or your average at that point, your point of control for that same time frame, and look to even maybe run that range. So as long as we are holding above the Q1, quarter one of this year, low of 76,511, I do anticipate the move that is most likely from here is going to be up. If we flip that into support, we'll look for a move up to our natural target, which is inside the range, up at the point of control. At this moment, it is untapped. Sits at about $96,000. And then there's also a really nice key region right at 93 if we get up to that area as well to be paying attention for. Of course, we'll be updating every step of the way. If you're looking to stay ahead of the next move, not just on Bitcoin, but across the entire market, I share nearly 24/7 updates inside my private Discord. From short-term setups to long-term outlooks, you'll get real-time analysis, actionable insights, and access to my full trading academy where I break down all the tools, indicators, and strategies I use every single day. If you're serious about leveling up your trading, click the link down below to join, and I look forward to seeing you all in there. Quite the setup here on Ethereum, as we've got a potential bullish harmonic here where we have a completion zone down around that area we came down to around that $1,400 early last week. And as long as that region is holding, I'm looking for a move up towards these key areas. Okay, we've got a couple of really big stairs and steps to get through, one of which is basically our monthly average for the month of April. So a likely target to be met. It's back up at about $2,044. The targets of this exact pattern is actually the 0.382 Fibonacci retracement that I'm pulling from the overall high here at 4150 down to that 1400. It also aligns with our quarterly high time frame average. So just like Bitcoin, just like anything else, we have these high time frame averages that are likely to be met in the following session. All right, so this is last quarter's average, this quarter's target, and that sits at about 2440. And it is a quarterly target. So this is something that we may not even get to. We may not get to it at all, right? That's just there's no perfect guarantee in trading or investing at all, but this is a likely area to be met in this quarter, Q2 of 2025. So anywhere between April to June, we could see that move to 2440. That is the first target of this harmonic as well. And then the second one is stacked with confluence. It's the B point, basically back up here at 3,100. It's also our gold pocket from that same A to D. So that 4,150 area to the $1,400 area gives us that gold pocket. We've also got a weekly untapped point of control, a volume target, all sitting up right there. $3,100 at the moment seems like it's never going to happen anytime soon for ETH, but when we were trading at 4,100, I'm sure nobody thought that 1,400 was coming within 2 months' time either. So we got to look for these levels at the lows, same at the highs, and be prepared and willing to adapt and adjust as we go. But that is something that I'll be looking here for ETH. And then on a more smaller scale, more locally, I suppose, obviously the move is potentially underway here. It's already up about 10, 15, maybe 20%. It looks like 20% there. I'd be looking for more confirmation for upside if we actually get above this 1670 level. So if we were to zoom out to a quarterly candles, this is a really big major quarterly area here at 1670. So this is the next major area I'd look to flip for a support base, really on a daily basis for that next move up. That at least takes us back up to 2000. And then from there, stair step it as we go. We'll look for the support and resistance flip once again, taking us up to anything higher. Solana has made its way down to a major volume target down at $97 and has gotten a sizable bounce from this. And so far, it's about a 37% rally off of that low so far. And we have a couple of key levels above us. And once again, looking at the week as we walk into it on today into tomorrow, maybe even into Wednesday, short-term pullback is probably something that's more so likely in the very near term. But overall, still looking for a rally up towards 138. As well as looking to flip that and then taking it up to potentially 172 to 177. So 138 is our monthly average that we're looking to come back to, our mean reversion for the month of April. That sits at 138. Like I said, currently we're trading at about 127. So even if from where we are now, that's about a 7% move, assuming that we'll probably see a little bit of a pullback as we start the week. And then we'll get that continuation up towards that 138. Brent ran it so far. And so, aside from that, it's been a really nice move off that low. But yeah, we'll be looking as the next major area to flip is going to be 138. And then we'll be looking for 177 after that. Among many things in this market, Chainlink is another one that has had a sizable decline from the high of basically back in December. From the over $30 high down to the low it's made so far has been a 67% drop. And right into currently at least a box that I put on here a few weeks back, basically when we were trading around this region here. And essentially when we came down, we lost the yearly pivot. So that's the average of last year. It's not necessarily a great look. And then I looked for a couple of key areas that we had left, especially on the rise up. When you see these big rises like this, a lot of times you get a quick rise up and a quick drop right back down, or vice versa. And really all we're doing is we're coming down and we're filling inefficiencies that were left from these previous just quick moves up. And at this point, we had an untapped 6-month level, a monthly volume level, a quarterly level, a quarterly volume level, a 6-month volume level, all stacked in this region right here. And we've so far come down and met all of those. So at this point, once again, maybe we'll see a sizable bounce out of this area. Maybe it doesn't mean we go back to all-time highs, but in the near term, next coming weeks, months, we'll be looking for at least maybe a bounce back to like $18. We're sitting at about $12.50 at the time of recording. We've made it as low as 10. So definitely in this little box of despair at the moment. And if we're going to locally look for some key levels to start getting back above, the first one for me is basically get out of this box, and it's 1428. So until we do that, really, we're just range bound in this region. But if you start to come up and we live above that 1428, which once again, this is an area to potentially put on some risk. The next major levels I'm looking for is back up to 18, which is our 382 retracement. Very, very natural retracement area to come back up to. We'll look for the flip from there, then look to see if we can flip this area, get it back above our yearly average at 19, head back up to that gold pocket, sitting at about $22 to $23 for Chainlink. All right, everyone, that wraps up today's update. And a quick reminder, if you're looking for more in-depth analysis, real-time updates, and a structured approach to navigating these markets, please check out the private Discord link in the description below. It's where I share everything from short-term setups to long-term outlooks. You'll see actually this is where I posted that Chainlink setup well before we came down into that $10 region, the Solana setup as well, well before we were down to $97 with the outlook and the targets at hand, along with full access to the Educational Academy. Also remember that Friday is a market holiday and we've got a key Fed speech on Wednesday, so expect volatility along the way. Hope you all have a great rest of your day. I'll see you all in the next video, and until then, everybody, cheers.